Welcome back, folks, to another episode of What Does It Mean? The podcast. I'm Chris Versace, and joining me are my co-hosts for the conversation for the hour, if you will, Lindsey Bell and Bob, the counselor, Lang. Before we get going, I want to have a quick conversation with you guys. I know we have a lot to get to, everything from the change for the Democratic presidential candidate to the flow of earnings to some big economic data this week. But before we get to all that, I want to know, did you guys have any major disruptions, travel or PC heartaches from all the stuff that happened with CrowdStrike and Microsoft last week?
Well, for me, I did not. I was on the ground here in Charlotte, but I had a good friend that had come in to visit, and she was leaving that morning. The Charlotte airport was apparently a disaster.
I saw pictures on Twitter for it, and I also saw some others from, I think, Denver and others, just lines and lines of people. And I can't believe that, several days after, Delta Airlines still can't get their act together. I mean, it's simply unbelievable, but it just goes to show how reliant we are on, I guess, what we could just call the larger digital infrastructure. Bob, how about you? Any issues, or were you just too busy on the tennis court?
Yeah, no issues for me, Chris and Lindsey, but I find it fascinating how just one little disruption, this wasn't even a cyber attack, right? It was simply a breakdown of process here by CrowdStrike. And the only thing I've noticed here recently is that the stock of CrowdStrike is just taking a beating. I think it's down something like 35-40% over the past 4 sessions alone. And, it seems like maybe where there's smoke, there's fire. Maybe there's something a little bit more involved here with what happened to CrowdStrike. And there might be some rehabilitated measures coming in to try and fix it so it doesn't happen again. But I think it sounds like it was a very serious matter, not just for the airlines, Chris and Lindsey, but for a lot of areas as well too.
It was financial institutions, local governments. I knew someone who tried to go to the DMV on Saturday, totally shut, couldn't do anything. So
well, that's normal.
No, not here in the great state of Virginia, Bob. We are a pro-work state, so people are out and working. I can't really say, oh, that's right, you live where Elizabeth Warren reigns. I forgot. Anyway, what I was going to say though is, I'm hearing what you're saying, Bob, about this and CrowdStrike, and I'm just going to say to both of you guys, do you think the CEO has to go? Because this seems like a major management bungle.
Well, I think he's going to be, I believe he's going to be testifying in front of Congress to explain himself, what happened here. But I think at the end of the day, Chris, I do believe that they'll get a pass on this one. In golf, we call it a mulligan. I do think that it was a serious matter, and there are other companies out there like Palo Alto, CyberArk, and a few other names out there who are going to probably take advantage of this and maybe steal away some customers from CrowdStrike. This is probably why the pressure has been on the price of the stock lately. But I do think they're going to get a pass on this one. But if it happens again, you guys, I don't see him surviving this one. George Kurtz has been around for a long, long time. He started this company back in 2011. And so I think, in fact, I don't know if you know that that CEO, Chris, was former Formula One driver. He actually ran in Le Mans. He was a fun fact, right? So
as I have long said in our relationship, Bob, I will not challenge you for Trivial Pursuit. Lindsey, Bob says it's a mulligan. Do you think it's a one and done? What do you say?
Yeah, I mean, I think we get a pass maybe this one time, but definitely all eyes are going to be on this situation. And I think too, when you look at, for me, the most impressive thing, I don't know if you saw on Twitter, X, whatever you want to call it, the visuals of the airline traffic disappearing. I mean, that visual, you can look it up. It was absolutely crazy, all due to this update to computers. And like you said, and Delta's still dealing with it. The interesting thing about the airline industry is volumes are up. Air traffic is through the roof for all these companies. but you're seeing pricing start to come down despite the amount of demand that's out there too. So I think it's an interesting dynamic in the airline space because they're not being able to translate that into profit.
I think that's a great point, Lindsey, and it's one that kind of sets us up along with McDonald's continuing its $5 meal. Apparently that is, for some reason, winning traffic. But we'll talk about all of that and much, much more when we come back right after this quick break. All right, gang, let's get rolling here with the big part of our conversation this week, the meat, if you will. And we will get to Lindsey's comment about airlines and what I said about McDonald's in a minute. But first, as we kick off, let's just do a check of sorts on the market. Bob, last couple days, stock market's been a little bit of a roller coaster ride. We saw some pronounced strength coming in to the week. We'll talk about some factors why, but from a technical perspective, what are you saying?
Well, late last week, we saw the markets fall like a bull in a china shop was just running around, going rampant against the bulls. And we saw almost a 2.5% drop in the S&P 500 over the last 3 days of the week, Wednesday, Thursday, Friday. We had hit some levels on the oscillators that were super high. And in fact, I look back historically, sixth highest level of oscillators on the NASDAQ and the and New York Stock Exchange in history. So at those points in times, the prior 5 times, the markets fell sharply after that. So I think the odds were probably favoring that. The buyers were exhausted. The buyers were done. We were pretty overbought on the markets, and we were due for a bit of a pullback. I'm not sure if it was 2.5% was enough. Maybe on Monday's market being up more than 1% on the S&P 500 is telling us it is enough. But I do think that we still have some more work to do. We're kind of in I call it a no man's land in the on the chart. It's hard to get long right here. It's hard also to short right here. So I think that by and large, we'll get some more earnings this week and a bigger amount of earnings next week at the end of July. And of course, the Fed meeting, I don't want to get in front of that, of course. But I do think that as we end towards the month of July, we're going to have some big movements in the markets to the 31st.
You know, we've only had this year one 5.5% pullback, only one. And we're coming into the end of July. Usually we get something like 3 or 4 of those every year. We haven't even had a 10% pullback, which usually happens once a year. Interestingly, though, I'm no technician like you. You're much better at it than I am. But I always look at RSI, the relative strength index, and that was overbought for quite a while. With last week's pullback, it came back into neutral to moving higher now, I think, but still more reasonable in the 50s. So I don't know. It is interesting. We're going into a period before the election where volatility increases. And earnings season, while like I said last week, the second quarter is so far, and I know we'll talk more about it, Chris, but it's been a good earnings season for the quarter, but the outlook is somewhat cautious and uncertain.
So if Bob's saying we're in a no man's land, but we're not overbought, Lindsey, are you still kind of sitting on the sidelines here, in terms of putting fresh capital to work? Because I know I am. We're right at the mouth, as you guys both said, the earnings season, and as it's starting to heat up, and we'll talk about that in a couple minutes, it's starting to emerge as a mixed picture, right? It's not necessarily going to be a rising tides lifting all boats. We're going to have to be a little more selective. And I just think that we're a little early in the overall earnings season, kind of as Bob pointed out, and it just pays to be cautious here.
No, I totally agree with that. I think it pays to be cautious right now. I think, interestingly, I was curious and asking myself coming into this week, especially after Monday's pop, the tech sector got sold off pretty significantly in the last week, right? And I'm wondering, are investors buying back some of these stocks that are going to report in the week ahead of what could be good earnings or decent earnings? It's always good. What I like to see from an earnings perspective is I like the stocks to come down into earnings season. It kind of lowers the bar, just like earnings usually estimates expectations usually come down going into the reporting period. It lowers the bar. The same goes for if the stock comes down, usually get a better post-print performance, I guess. So,
well, the flip side to that, Lindsey, is when I see companies start to release like a flurry of press releases right before the earnings date, I always get nervous. It's kind of like a little bait and switch. Do you know what I mean? Oh, look at all we have going on. Don't worry about the quarter.
The only thing worse than that is reporting on a Friday afternoon, right?
Oh yeah. So I would also say that referring back to what Lindsey talked about with relative strength, we've had that high relative strength for a long period of time. In fact, if you go back to the bottom that came in at around the end of April, and we started making a series of higher highs, higher lows, our textbook definition of an uptrend, we were actually at those elevated levels on relative strength for about a good month or so, and above 75 on the RSI for a good, actually, I'm looking at the chart here, 6.5 weeks. So, at what point do you say, I got to get off the train, it's way overbought? If it just keeps going up and up and up, it says a lot about the market trend and the strength and the power of the market right now. And certainly since last October, when it appears that a bottom was put in on the S&P 500 and the NASDAQ. So I think it's a testament of the strength of the market right now. And even this pullback here, if it's good and yesterday's rally is something real, then we have to be paying attention and try and get on board.
So, Bob, when you're saying the strength of the market, there's been a lot of conversation about a widening out of the market, people moving from big tech to other parts of the market. Are you detecting that? Because, what we saw earlier in this week, this Monday rally that you referred to, I mean, NVIDIA, Qualcomm, all those big tech names were back in vogue.
Right. So when I talk about breadth, I'm talking about expansion of groups and sectors and so forth. And you recall, Chris and Lindsey, earlier this year and even late last year, the talk about the Mag 7, right? These 7-8 names that were simply driving the performance of the market. I think the 7 names of the Mag 7, the Teslas, NVIDIAs, Microsofts, et cetera, were responsible for a large portion of that S&P 500 return in 2023 and left a lot of other stocks by the wayside. So when I look at breadth, when I look at participation, I want to see a lot of different sectors, a lot of different groups. And what captures that is the Russell 2000. And we've talked about that recently, and we did a chart recently for that for our Street Pro subscribers on Real Money. What that does is it shows a broadening out of a lot of different groups, not just technology, but financials, gold, housing, retail. A lot of these little companies that are housed in the Russell 2000 started to do well over the past 3.5 weeks. And actually, since July 11th was really when the day that we started to see the outperformance of the Russell 2000. That was the day that CPI came out and was a little bit better than expected. And all of a sudden, rates started to drop, and it was off to the races with the small cap. So when I look at the breadth, Chris and Lindsey, I look at that. That's really the indicator that I want to see do well.
So if, Bob, for Lindsey, it's more clarity on earnings, something I would say that I'm looking for too as well. What are you looking for from a technical perspective that would kind of get us out of this no man's land?
Right. So I want to see a continuation of the trend of higher highs and higher lows. I also want to see when we touch back, when we get extended, we touch back to moving averages. In the case of the S&P 500, we got very well extended over the past 6.5 weeks since the beginning of June, away from the 20-day moving average, which kind of acts like a magnet. Now, the 20-day moving average is important for me because it's about a month's worth of activity, right? It's about 20 days of trading in a month. We got pulled away from that moving average for a good period of time, and we pulled back down, and we're testing it right now. And so I want to see how well we do around that 20-day moving average here. If we break out above that, we're planted in a lower level that's higher than the prior one, which was back at the end of May, and that allows us to step forward and move up and make higher highs along the way.
I was just going to say, I love Bob's perspective because, like I said, I'm not a technician, but I'm a fundamentalist. Like, I'm always looking at the fundamentals of a security or a sector or whatever it is. But it's always so good to dovetail it with what's going on with the technicals. And so it's just another data point that either supports or helps you make a decision about what you want to do and where you want to be or where you think we're going. So I always love listening to folks like Bob talk about this stuff.
I will just say this, Lindsey. This is why we call him the counselor. And for some folks, actually, and the vast majority of people probably don't know this. Bob and I really got to know each other when we were at the street working on one of the first products that we worked on together, which was Trifecta. And that was a great product because we melded the fundamentals work that I was doing with Bob's technical work. If only there was a better quant rating system at the time, boy, that product would have been on steroids. But that's neither here nor there. But I do 100% agree with you, Lindsey, on that point about Bob and the technicals that he brings. Gotta love the counselor. Now, with that, let's move on, because coming into the week, the big news was what happened on Sunday. And I'm, of course, referring to Biden out, Harris in. What do you guys think? Does this fundamentally change the election and the potential impact on the markets?
I don't think it changes much. I mean, I was looking at the betting market, and you still got Trump on top by a wide margin, although I guess that margin is shrinking as Harris moves up and seems to have all the backing that she needs to clinch the nomination. But the DNC obviously is in it for several weeks now. So to me, it becomes a question of, because there was a lot of commentary going around that the move in the market, and I love that Bob talked about July 11th and the CPI reading. There's a lot of talk in the market that the move that we've seen in small caps and some of the other trades out there have been a Trump trade is what it is. Is it a Trump trade or is it an inflation trade? We saw inflation falling nicely. We saw yields falling with it too. I think it's more of that than the other. But
Lindsey, let me just throw in there, since that report, and I think Bob wants to talk about this in a little bit. We did see expectations for rate cuts bounce back up, right? The Fed had been talking about 1, the market had been kind of thinking maybe 2, and since that time, the CME FedWatch tool, I think, is showing somewhere, correct me, Bob, between 2.5 and 3.
That's right.
Yeah, so I think that helps explain the lift off in small cap stocks as well.
I don't really know where the Trump trade narrative came from.
Lindsey, I think it's more like Trump just taking credit for it.
He could be.
You know what I mean? Bob, go ahead.
Well, what I'm just going to say here is that if you look at the market over let's look at the past 7-8 years, right? We had, you go back to 2017, Trump's first year in office. You remember the S&P 500 was up every single month for the whole year? Never happened in history. 2017, every single month was higher. It was a strong market. Following after that was a poor market. Then we had COVID coming in 2020. We all know what happened there. But then, Joe Biden takes over. And if you want to use Kamala Harris and Joe Biden as a proxy for each other, fine. We've had new all-time highs in the markets as well under them. So I really don't know what the difference is. If you're talking about the performance of the stock market, I guess either one of them could drive the market, or is it the Federal Reserve and interest rate policy that is driving it instead?
Wow. Okay. There's a lot to unpack. That's like a whole episode unto itself, Bob. I'll just say kind of quickly, and Lindsey, please chime in. I think as it relates to Trump, right, it was the notion of less regulation, a looser policy on energy, potential tax cut that we eventually got. And if you look at what really popped S&P 500 earnings in those first 2 years when Trump was in office, it was that tax cut and the impact to corporate earnings. With Biden, I think it really shifted around towards stimulus spending and the benefits that we're seeing, along with the expectation really over the last, I guess I would call it, 6 to 9 months, that the Fed might actually be beating on inflation, winning on inflation from the old Charlie Sheen, or getting ready to make these rate cuts. So We will see. I think we've got some data coming out later this week, though, that could tell us if the market's ahead of itself when it comes to rate cuts. But let's stick with the election. I think you're right, Lindsey, that ultimately it's not really going to matter much. I think it's going to come down to policy. My suspicion is, and I mentioned this to Bob earlier today, is that right now Harris is getting, a big wave of euphoria, right? Really playing into the not Trump people, right? Okay, fine. But at some point, she's going to have to come out and she's going to have to start talking policy. What will she do? What will her efforts be directed towards? And I think, I'm not going to say that the bloom will be off the rose, but I think it'll be a sobering moment for folks. Maybe she delivers. I don't know. I think we have to wait and see. But I think it's going to be a long and contentious election season. I think it's going to bring out some of the ugliness that we see in America. I hate to say that. And I think it's going to come down. It could very well come down to the wire.
Yeah, I think it will come down to the wire. I think it's going to be an interesting. Usually after the election, we usually see strength at the end of the year, going into the first year of a presidential term, which also is usually historically strong. We can thank our friends at the Stock Market Almanac over there for that information. But we're looking at two candidates, even though she is new. I think a lot of people are expecting her policies to be Biden-esque. And then we know Trump, right? We've already had Trump. So the interesting thing there is that we know what we're getting. Whereas, coming into other elections, you don't always know what you're going to get. If there's not a sitting president running, you can have a different type of performance in the stock market. So I think I think this technically bodes well for the stock market, at least into the end of the year.
Bob? So what Lindsey said there was very important. What is the stock market does not like uncertainty, right? So what she just explained there was that you know what you're getting with both sides, right? With Trump, you know what you're getting. If Kamala Harris comes out with like Lindsey said, Biden-esque sort of policies, you know what you're getting. So the market knows what it's going to get, and so it's going to have a tendency to reduce volatility. The VIX is going to stay low. We already have, what's interesting, and I think we talked about it last week, we have a huge rise in volatility going out to October, November, which, a lot of people are pricing in a lot of turmoil, a lot of chaos coming from the election. So if that doesn't happen, and like what Lindsey says, the market already knows what they're going to expect over the next 4 years, well, why is volatility high? You're going to sell volatility, and what normally happens when volatility recedes, comes down, you see the markets go up.
Right. Okay. I do think, I'll just add this before we move on, that I think the onus is on Kamala Harris to show herself to the American public, right? Typically the VP is not exactly forefront, and I think she's going to have to win over naysayers. We'll see what happens. But here's my call on this. The DNC and the Harris campaign are going to flood the market with digital advertising in order to help Kamala's persona become known, recognized, and hopefully relatable. I think the two big winners out of this, Google and the Trade Desk.
Interesting.
No takers on that, huh?
I would say Meta was probably going to be a big winner off of this, especially if there's a lot of banter, a lot of advertising, and so forth. I think they basically said that they're willing to accept, language and talk on unrestricted. So I think probably going to be.
You might be right on that, Bob, but I'll say two things on that. One, Meta did say that they would reinstate Trump's Facebook account, so it's going to be, going to be a poop show. I'll just say it that way. And then the other one is that we own Trade Desk and Google in the Street Pro portfolio. Just want to disclose that, lest someone accuse me of talking our book. Lindsey, so earnings have started.
Well, wait, let me just, before you switch.
Oh, go ahead. Yeah, go right ahead.
What I was going to say is I think that Twitter X I'm sorry, like I don't never know what to call it, Twitter or X.
Well, do you tweet or do you X? That's the question.
I tweet. I know a tweet. I tweet. No, so I think that that's already proving to be a big winner in this whole election year cycle. Just, I mean, with the Trump attempted assassination, with the Biden news, people are going there first.
You know, it is true. Like I like we talked last week when I was at the Savannah Bananas, everybody, the minute they heard, you just saw phones turn to X, right? It's you can say what you want about the platform. There's a lot of noise, a lot of garbage, a lot of funny people as well. But when it comes to breaking news, it is a pretty good resource. And you could be right. You know, Elon Musk could be undercutting folks at Meta and elsewhere to capture a lot of this incremental digital advertising during the election season. I mean, Baird came out and they said that they see the presidential cycle and the Olympics driving a high single digit to low double digit year over year increase in digital advertising. So you know folks are going to be chasing it. Now, Lindsey, I mentioned the Olympics, and I know you had something about the Olympics you wanted to talk about.
Yes. I mean, because before, as we prepare for this wonderful podcast that we do, Bob had this amazing idea of like, how do we tie in the Olympics? It's coming out where, you know, the kickoff ceremony is on Friday. And I shouldn't take credit. I was reading through some of Bespoke's research, and they mentioned the Mag 7 from 1996, the women's gymnastic team that just took the gold and dominated. So they're the original Mag 7, right?
Right.
So we're going into Mag 7 earnings as we now know it, which is going to be highly anticipated. I think that, you know, you saw, we started talking about the downtrend of last week in the market with a lot of the tech sector being hit pretty hard. If you look at the Mag 7, if you look at the charts of these stocks, they're still in a pretty strong uptrend, Bob. I know you probably are already looking at those. So even though they've sold off, it's kind of like this opportunity, this buying opportunity potentially ahead of what could be good earnings. Of course, you know, I was looking at the Mag 6, took Tesla off the list. But you know, that group of names, Alphabet, Google, Amazon, Apple, Meta, Microsoft is expecting about 31% earnings growth in the second quarter. But the quarter overall right now is estimated at about a 9% earnings per share growth rate. So you could see that the rest of the market is lagging significantly. So I think there is a lot of weight on the shoulder of these stocks going into earnings season. And like I said, it can be a blessing when the stocks sell off ahead of the reporting period. But I think just like last quarter, expectations are high for this group. And again, it's going to be like, just like every other company out there, it's going to be about the outlook. What are they expecting? What are they seeing coming forward? And I think, Chris, I know you'll probably want to talk about this. I don't want to forget the move in the semis. Taiwan Semiconductor, a couple of the others came out and they talked about how strong demand was for their equipment and AI chips. I know you did get to it deeper than I do, so I know.
I will take that baton, Lindsey. Don't you worry.
Okay.
Sticking with our Summer Olympic theme. Yeah, no, you're 100% right. I mean, the TSM earnings report for June came out. Holy cow! High performance computing was up over 50%. They say that they see it doing that again in the September quarter. Smartphone was up big year over year, and if you kind of interpolate their guidance, it should also be strong, kind of confirming it. But their commentary about AI on device, whether it's PCs or smartphones, and the expected upgrade cycle, just kind of reinforcing it. So yeah, I mean, a lot of positive data points, but there was also, and I don't know if you guys saw this or not, but there was a price target increase this morning for Microsoft. I want to say it was Piper or Baird or somebody like that. And what they said is Microsoft is targeting more than doubling its cloud revenue over the next 2.5 years, going from about 100 billion to 200 billion. So if they're going to do that, that tells me that they will be spending, I won't say like drunken sailors, but they're going to have to spend quite a bit on data center That's going to be great for stocks like Nvidia, Marvell, potentially AMD. Who knows? Maybe even Intel will get its act together finally.
Well, the one thing I would caution about, and I'm like TSM and it's Chris and Lindsey just played out here. Stock is up 70% year to date since January. So and at the peak just about 2 weeks ago, it was up at about 85%. So I worry that perhaps the good earnings are already baked into the price of the stock. I hate to throw cold water on it, but you have to realize something, that the market does tend to get ahead of itself, especially with boring stocks like Taiwan Semi.
I'll go you one step further on that, Bob. As we go through this earnings season, one of the things I'll be listening for is, to the extent that capacity is still tapped out for these AI chips, are we getting the sense that companies are putting in multiple orders, right? And the reason I say that, why I'm listening for that, is historically in cyclical industries, whether it's rail cars, trucks, ag equipment, construction equipment, during the uptime in the cycle, when capacity is tight, companies will put multiple orders in for equipment. But as things as we go through the economic cycle and things slow, you start to see potential cancellations in that backlog, right? Next thing you know, those companies have production gaps. So I'm not saying, oh, this is happening here, but it's something to be mindful of. That's kind of where I'm coming from. But look, we also had comments out from NXP Semiconductor, which were not only good for digital infrastructure and mobile, but they were a little eye-opening, in my opinion, for auto, because their business for auto chips was down year over year and sequentially. GM came out with some good guidance, but in earnings, but that stock is actually falling off. And I think it's a more cautious tone, perhaps, on the second half of the year about getting their financial house in order. Have you guys seen anything on that?
I noticed what you just said about the auto and the NXP sector, and I think it kind of aligns with, and I think we're going to get to inflation at some point here, but
yeah, we will.
I think it kind of aligns with what you're seeing is the consumer is slowing. The consumer is starting to feel a little bit of pressure. You see that in the jobs data. You're seeing it in inflation, and that's what we need for a soft landing, really. Is we need a slowdown in the economic environment. So I know we just had a upbeat conversation about semiconductors and AI, but on the other side of it, the consumer is starting to, I think, slow down on spending and things like that.
Well, I saw earnings from Polaris, right? The big ATV company. You cannot get a more discretionary purchase than an ATV. And they were saying that the inventories at their dealers have ballooned. They slashed their outlooks. They're slashing production to get more in line. I think that's another indicator, Lindsey, that the consumers are being increasingly selective. But there was also something that I saw, I think Chain Store Age reported on this, that there was a large increase, I want to say 25, 30% year over year, for the number of online vendors that are using discounts and coupons, because they've got to lure people in. And that, of course, I think speaks to what you're talking about in terms of disinflation.
Yeah, I think that, we talked about it. I think you mentioned it earlier. McDonald's extending its $5 meal deal for another month at least. We'll see how long that goes. But you're seeing it, even some of the companies that have reported already, ConAgra, Pepsi, Starbucks last quarter, we might hear something very similar this quarter, is that, volumes are dropping as prices have increased. Although ConAgra actually cut prices a little bit, like half a percentage point, but volumes were still down. And what I've been saying for the last year is we're literally living through a real life experiment of price elasticity of demand. And I think we're hitting, I think companies are realizing they're hitting, the consumer has reached their tipping point. If you look at food at home costs, for example, I know we're just talking about food here. It's up 25% since 2019. That's a lot. So the consumer is looking forward to that disinflation. I was at the grocery store recently, and I was like, whatever my most recent checkout was, I was like, that was a little cheaper than I expected. I noticed the eggs and the butter were on sale. I bought 2 tubs of butter because I'm like, whoa, I like that price. But so prices are coming down, which is a good thing. That's going to make the consumer feel better. We know goods prices has been disinflationary for a while. It's the services, because that's where the demand is, where people want to spend their money, right?
Bob,
that's been more sticky.
I was going to say, Chris and Lindsey, that as far as General Motors is concerned, I did see its stock pop right after earnings came out this morning, and now it's retreating here. I think the market is telling you, this may be as good as it gets for them for this cycle. This is it, and meanwhile, it's time to take some money off the table. Some big investors are in this name, have always been in this name, but it's time to take some chips off the table, because I did hear the CFO talk about good pricing for the past couple of quarters. They did raise their numbers, raise their guidance a little bit for the end of the year. But again, I think listening to what the market is telling you versus what the executives are telling you could be two different, completely different stories. But I do think that the market is telling you this, that perhaps the best is behind them for now.
Let me share one quick anecdotal story, and then we'll move on to this week's economic data, because we're going to get lost in the sauce if we don't. So the story is this. We recently got rid of a Toyota Highlander, and we picked up a Ford Bronco Sport. Great car, love it, packed. But here's the thing. We went and looked at all sorts of dealerships. A lot of them had not 10 or 12 cars on the lot, 30, 40, 50 cars on the lot. Here we're talking Audi, we're talking Ford, obviously, Kia, Honda, you name it, right? And, you always have to negotiate when you do these things. It's kind of a slimy process, but you got to do it anyway. The first offer that we got for the Toyota Highlander came from Kia, and it was for $12,000. Okay, we're like, all right, thanks, whatever. Didn't really want the Kia, to be honest. But then a couple of days later, Kia texted us and said, hey, how about 15? Without us doing anything, right? So you knew that they were kind of primed to deal. So we took that to Ford, and Ford said this. They go, oh, we're not really sure your car's worth it, but we'll give it to you anyway to make the sale happen. So it tells you that these car dealers, and therefore the automotive companies, things are, as we talked about with the consumer, Lindsey, they're becoming more cautious, more selective, what have you. In other words, I think they're getting a little more desperate. I wouldn't be surprised if we see more incentives coming. Perhaps that's what the market is taking a look into, calling into question profits on gas-engined cars while these companies continue to take a bath on EVs.
I think that's a good little anecdote.
I try. I don't always do it well, but I do try. Let's move on, because I know we're running a little long here. Two big economic data points coming out this week. Lindsey, which one's more important in your mind? The June core PCE number or the flash July PMI?
So yeah, I think it's the core PCE, because that drives the Fed. The Fed meets next week. And so everybody's expecting the Fed to kind of signal that September is the time for the first rate cut. And I think the PCE will impact that. The markets, I was looking at the Cleveland Fed, the market's looking basically for a 2.5%, just under 2.5%. I know we're going out multiple decimal points now. Like, are we just losing our minds over here or what? But so, which would be down from 2.6 in the prior month, and it showed the continued resumption of downward trend, and the Fed wants to see us getting to 2% on their favorite indicator. So I think the market's really going to be watching that. Although I do think, we've seen the market move in response to the CPI, so it's kind of, as long as there's no surprises, this should be par for the course.
Okay, Bob, any thoughts on the July flash PMI, or are you with Lindsey on this?
I'm with Lindsey on the PCE, personal consumption expenditure. I think the month-over-month, they're looking for a 0.1, so that would be an annualized 1.2% on the core PCE. Certainly in the zone for the Fed to start having a discussion about rate cuts based on that one indicator. But I'd also throw one more thing out there as well, too, Chris and Lindsey, is Thursday morning, we get the first look on the GDP for second quarter. And I think this is an important report. I think the Fed is going to be looking at this one, not necessarily on the growth number. I think The consensus is looking at 1.9%. Lindsey, you may know a little bit better number than this. But the more important number is the deflator, which I think they're looking at about a 2.6% increase in inflation. So is the growth from Q2 being driven by inflation or actually organic growth? So that's what the Fed is going to be paying attention to. I think this is an important number. I know it's a look back from 3 months ago. It's somewhat insignificant, but it is a very important number because the Fed is concerned about growth, and it will help them make decisions towards policy going forward.
I think that's a really good point, Bob. The other thing I would say too is the PCE is it's less heavily weighted towards shelter and rent. So I think also the recent existing homes data, even though the number was really weak this week, the prices hit a new record high for the second month in a row, which is like, I'm not so that the shelter component of CPI has been really sticky. So there's definitely a lot of moving parts here too. But I really like your point on the deflator being an important component of the GDP reading for the Fed as they go into next week.
Excellent. And with that, folks, we will be right back. And when we do come back, we'll be sharing what we each learned from our conversation today. Hang tight. All right, Bob and Lindsey, let's put a bow on this episode for everyone. What do you say? Bob, sum it up for us. What does it all mean? And what did you take away from our conversation today?
Well, it all means that the market is trying to get straightened out here from a little recent corrective period, but there's a lot of data that you talked about with the PCE coming out later on this week, and then also the GDP number, and then the flash number as well too for PMI. So a lot of data here, and don't forget earnings coming out. So there's a lot of information here that we have to process here. The markets have done pretty well for the month of July, even though the last few days have been of last week were corrected period. But I think that by and large, the uptrend is still intact, and I think we're going to be moving forward. And I think certainly earnings are going to be the driver of performance here.
So earnings matter, Lindsey. You just heard Bob say it. Wrap up the episode for us.
I'm always going to agree that earnings matter, but I think that's my bread and butter. But yes, earnings matter. But I think what we're seeing is, to me, what we just talked about is there's a lot of puts and takes in the market, and it's not a one size shoe fits all type of story. Bob just said we're still in an uptrend, and so I'm supportive of that and like to see that too. But I think when there's puts and takes, that creates opportunity. So I think it's, you take each piece of data one day at a time, and you make informed decisions off of that.
Excellent. Well, I'll say this. I think what stood out to me in the conversation was what Bob pointing out, when it came to volatility and for October and November. I think that was a great standout point. Lindsey, I'm going to agree with you on earnings, which is why I'm going to say, for me, what it all means is that we are starting to see the earnings season really accelerate now. It's going to be, in my estimation, a little choppy. There'll be certain parts of the market that do better than others. And I think folks that are listening, prepare your shopping lists, get yourself ready to take advantage of some of these opportunities that come your way. You'll be wanting to look for companies with increasing strength in the back half of the year, or levels at which you might want to pick up companies that kind of disappoint a little bit, and given a potentially nervous market, you might see them pull back more than they should. So get that shopping list ready. Any closing comments, Bob? Any closing comments, Lindsey?
Well, I'd say, watch the Olympic Games. They're going to be starting on Friday. Lindsey made a great reference to that with the Mag 7, and I'm excited to see what happens in Paris to our young athletes and American athletes, and see how they do.
I'll add on to that. I watched a Simone Biles special on Netflix. You got to watch it. It's pretty good.
All right. We'll do that. All right, folks. This is Chris Versace. saying actually next week, Bob and Lindsey will see you next week. I will be out, but I trust them to take the reins and take you through another wonderful conversation, putting it all together and telling you what does it mean. Between now and then, take a look for Bob over at explosiveoptions.net or at Aztec99 on whatever we call it, Lindsey, Twitter, X, whatever it is. While you're doing that, look for @JustLBell for Lindsey and check out her newsletter, The Shift. As for me, folks, you can find me over at the Street Pro Portfolio or Thematic Signals. Thanks for listening. We'll catch you next time.